Hello, Mavericks, and welcome to today's Market Roundup. It is April 3rd, 2024. So today we'll be doing a review of the trading day, of course. We'll be going over any meaningful news, taking a look at the broader equity markets and a couple of key commodity sectors as well. We're then going to do some technical analysis on the major market indices, examine the market internals, and take a peek at the sector heat map. And we're going to wrap things up by looking at some potential trade setups and opportunities. Let's get into it.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Starting things off with some market analysis. All right, so today the stock market kind of hung in there. Yes, the Dow ended the day slightly down, but pretty much flat. The S&P up 0.1%. The Qs up slightly as well. Small caps up over 0.5%, oil up 0.5%, and gold up over 1.5%. So in terms of daily news, it was a little bit mixed as far as inflationary expectations go. ADP payrolls rose more than expected. However, services PMI came in lower than expected. And the initial reaction, especially in the pre-market, right, like the major averages weren't doing that well. The dollar has been weak the last couple of days, and then boom, the floodgates opened, the dollar weakened. We saw gold soar, and the markets recovered quite well. However, from an advanced decline perspective, these aren't fantastic numbers, but considering how under pressure stocks were in the pre-market, this AD line is relatively healthy. And then the 50. The number of issues above and below the 50 MA are relatively healthy as well. My apologies, those are actually flipped. 59% of issues are above the 50-period moving average and 41% are below. Okay, so let's take a look now at some price charts of the major market indices. So here we've got the Qs, and the reason I want us to look at the Qs first here is because we popped below that 20-period moving average, and today we're just above it or just around that 20-period moving average. So it'll be very interesting to see how we close out this week, especially with non-farm payrolls on Friday. If we start breaking lower, then we might have the first significant change in our scoring system in quite some time, at least as far as the Qs go, and the S&P 500 shouldn't be all that different. You can see today we're above that 20-period moving average, but the volatility that's going to be released from Friday's jobs report could easily reverse that. But as of right now, we still maintain a +3 score. And the heat map today is somewhat mixed, reflecting the market conditions here. Netflix had a great day. Eli Lilly had a great day. General Electric had a really good day today. And Apple finding a bit of buying pressure here. Tesla up a little bit too. Microsoft and Nvidia a little bit down on the day, however. All right, so taking a look at the outlook here, we still are at a +3. There's no denying that. If I have to give rationalizations for why, I'd personally, struggle. I'm naturally more in the bearish camp more often than not. So it's very easy for me to come up with reasons why the market shouldn't be this high. But guess what? That just doesn't matter. It doesn't change the fact that the market is in fact quite bullish right now. Now that could change completely in a week, in 2 weeks, in a month. That could completely change, but we have to trade the market that's in front of us, not the market that we think we should have, right? It's that old saying, markets can remain irrational far longer than you can stay solvent. So taking a look at some potential trade setups here, first up, we've got MIO, home builder stock. Been trading this stock for well over a year now. It's been behaving really nicely, and this is looking like a very solid bull pullback to potentially buy from. Okay, next up, this is more of a range-bound trade. Here we have ARM Holdings just trading nice and sideways in between the two moving averages, exactly what you want to see from a neutral stock. And then finally, we have a bearish setup here in Carnival PLC, broken below the 20, 50, and 200 period moving averages, and looks like we're headed lower. So I really liked the idea of playing the stock on the downside. Okay, so to wrap things up, Friday we've got fireworks, all right? And I think Friday is going to go a long way towards determining whether this current melt-up phase is in fact over or not. Now, I could be wrong. It could be that the non-farm payroll reports are just a nothing burger and we get no significant price volatility out of it, but I don't think that's likely. It really looks like the market is begging for some kind of catalyst here as an excuse to either continue this melt-up or for investors to sell some stocks and take some profits, take some gains off the table. There is still some cash there sitting on the sidelines, in my opinion, however. So, I hate saying anything can happen, but it really truly does feel like, well, anything can happen this Friday. So my personal trade plan for this week is to be very, very light with my position sizing. I'm definitely sizing down, and I'm not looking for any home runs here. I'm very happy with base hits, and we'll see what Friday brings. All right, tomorrow we've got unemployment claims, and then as far as earnings reports go, tomorrow we have RPM, LW, and CAG. All right, traders, thanks for watching, and I'll see you Mavericks another time. Bye for now.